Joining us now with his outlook, Bank of America head of global commodities, Francisco Blanch. I mentioned the vacation element of summer travel. Francisco, does that really drive oil prices?
Hey, Sarah. Yes, absolutely. Oil prices are very much dependent on how much we move. And coming into the summer, we are going to see, I think, a bumper tourist season across Europe, the U.S., and the newly restarting market of Asia. I remember Asia has been pretty much in partial lockdown for the last couple of years, with China obviously just reopening a few months ago. And we expect that combination to lead to very strong demand for gasoline and jet fuel, as you pointed out, and eventually $90+ Brent. So oil, WTI crude oil back into the mid-80s by the summer.
Yes, I mean, people know it's a kind of strong travel demand environment. They know about the Chinese reopening. We have OPEC cutting into a strong demand environment. I'm wondering why oil prices aren't higher.
Well, I mean, I think we've hit a bit of an air pocket in terms of demand. We came out of the winter with pretty high temperatures. Remember, natural gas prices got crushed. We've seen Henry Hub gas trading at around $2/MMBTU. Global gas prices also came down crashing. And I think as we come into the summer, we still haven't seen the strength of the Chinese economy. At Bank of America, we recently revised our China GDP growth forecasts. So now we're expecting GDP over 6%, which is well ahead of consensus at 5.3% for the current year. So we think not only are we going to see the strength of tourism travel, but also a much bigger China rebound driven by the consumer, but also by increased investment. Fixed asset investment is going to pick up as a credit expansion is taking on there. So there's a number of factors we think will get demand to 1.5 to 2 million barrels a day in terms of growth year on year in 2023. So that's the main basics. And I think the European economy is a little better, and well, the U.S. is still heading into recession, but hasn't quite gotten there yet. So.
It's going to get interesting. Well, I guess it potentially could be interesting, Francisco. For example, in China, some of their drug makers rallied this morning on concerns about renewed COVID problems. COVID was the #1 search term on Weibo over the weekend. I mean, we're not talking public health here, but how solid do you think the recovery is over there? Do you think it could be given a second look, depending on how some of these trends fare?
Sure, Carl. It's always very hard to predict. We've had a recovery of fits and starts ourselves in both the U.S. and Europe. So China could go through a similar phase, but we saw a very large wave of COVID already in the winter. And to the extent that there's a resurgence, I think there'll be some fears. But generally, what we've seen in countries nearby China is that as soon as the routes reopen to Thailand or some of the nearby places, Korea and what have you, there's a huge pickup in activity. And international travel in China is still about 50% of pre-COVID levels. Domestic air travel is back to normal, more or less. So I think the trend suggests that we'll see a continuation, but of course, as we've learned with COVID, it's always hard to tell. And China doesn't have the same kind of vaccines that we've had in the Western world.